it's just unlisted on YouTube, but I'll put the link up once it's I test, make sure the audio hasn't gone through. It shouldn't pick up the audio. Pick up your guys' talk, your chat, but it shouldn't pick up the music, in theory. So we'll see. All right, so yeah, a bit of a slug after that. Some nice moves on NAS afterwards. NAS was good with the news that came in, and my best trade was actually gold yesterday. So NAS, I took a buy after the interest rates came out. That came out at 245. Sometimes we get a bit of volatility with those CAD interest rates, but this time it didn't. But then we had 3 o'clock where we had the JOLTS, the job openings and labor turnover survey. That's what JOLTS is. JOLTS. Job openings, labor turnover survey. So I kind of, in the past, always just disregarded it, but it's actually a fairly significant event, mainly because at the Fed, if you ever watch the Jay Powell's meetings, they actually refer to it quite often. So it's something now I've taken a bit more notice of, and it's not so much that how much there is. So let's have a little peek at it. So JOLTS job openings, you can see it's like 8 million here. The number is kind of like pretty big, and you get a lot of discrepancies. Like it's usually a miss. But the main thing is what they look at is here we go, it's a big miss. What they look at is the actual ratio between the jobs openings and the unemployed, like how many people are looking for work. So that if there is at the moment, the ratio is around 2 to 1. So you've got 2 job openings for every unemployed person. And most of these job openings, though, you got to think of like restaurants, pubs, bars, etc. That they just have like these are the number of ads that are available. So it's a survey as well. But what they do is like a lot of these jobs are just constantly open because there's such a high turnover rate. There are always people looking for hospitality staff. So it's very much dominated in that. But in essence, it's like there should always be a job for every unemployed person. It's just whether the unemployed person wants to take it or whether they're suitable to work. The other thing that they look at here is when people put up ads, a lot of like high quality positions, the company will have an ad up to fill, but they don't actually have a job available. So what they do is they just put in feelers out that if they get a high quality candidate, what they'll do is then they'll make a position for that person. So a lot of the job openings here are simply not to ever be filled. That's why there's always 2 to 1 or more. It's simply just trying to either look to see if they're going to get a good worker or their positions in high turnover industries. But the ratio is what's important, not the number so much. So when they look at like trends and how it's trending, pre-COVID, it might be like during recessions, then the ratio might drop significantly. I could put up some more stats later on, but like they'll have stats for job openings, and also there's another one which is not job openings, but it is like how many people quit. So they'll have like the quit to jobs ratio as well. So if you've got like a ratio where less people are quitting and more jobs are opening, that ratio might be like 0.8 or 0.75, etc. And this is a bit more of a sensitive read. They don't show it here in Forex Factory, but it's more of a sensitive read that to sort of like show trends within recessions or to try to pick up when a recession might be happening or coming out of a recession, etc. Either way, that does have a bit of an impact simply because the Fed refers to it as well, so we should take note of it as well. So it came out soft. So as soon as it came out soft, what's that telling you? Telling you that the labour market's slowing. So that's just further proof that they're going to cut rates. Now, what I think is they're going to cut rates. We know they're going to cut rates in 2 weeks' time, on Wednesday the 18th. So the question is, are they going to cut by 0.25 or 0.5? And I think they're going to cut at 0.25, but I know that the closer it gets, the market, every time we're going to get a soft report, it's going to be, 0.5, 0.5. So what I'm thinking is that they're going to price in rate cuts. The lower end of the spectrum is going to be a rate cut of 0.25. The upper end is going to be 0.5. And I think the market's actually going to price in somewhere around this level. So they'll probably price in close to a 0.5 cut. But then when the rate gets cut by 0.25, it'll actually be a bearish signal. Does that make sense? So they'll probably equities will probably price up leading up into the news from wherever the lows come from. I can talk about, remember yesterday I was saying that there were comments on Tuesday from out of Bank of Japan talking about the need to keep the wage price increase at 2.5%, and also that they're looking to hike again potentially before the end of the year, and that this Tuesday sell-off, we saw a sell-off in crypto, we saw a sell-off in gold, we saw a sell-off in equities, we saw a sell-off in every single currency except for the yen. So we know it was very much a yen-orientated move. And so that sell-off here on the Tuesday actually looks very reminiscent of what happened at the start of the month on the 1st of August. Like what triggered this sell-off? It's because everything was selling off. But these were just comments. They weren't actually a rate hike. Now, also, what happened on that Tuesday was after the market, we got reports that NVIDIA had been subpoenaed by the DOJ, Department of Justice. And now NVIDIA saying they haven't been subpoenaed, so there's a little bit of weird information going. Either way, this must be some serious insider trading, because out of all the mega caps, NVIDIA on the Tuesday really got smashed. And so for sure there's going to be some people that have been like in the know and knew that this was going to happen. So what we saw was just heavy selling on Tuesday from NVIDIA. They were down like 10%. Funny how it tied up that once they got the news that there was going to be a subpoena for antitrust lawsuit, like monopolization tactics. It's funny how the market has sold off beforehand, so no collusion there whatsoever, surely. Anyway, so when wherever the market's going to bottom out, maybe it's going to bottom out here, and when we start pushing up for rate cuts, we're going to be like pushing up, but leading up to those cuts, and they're pricing in a jumbo cut. But then when the cut comes out and it's only a quarter point cut, people are going to be like, hey, what happened? Why did the market go down? When they cut rates, that's normally good for equities, but it's because they're probably priced in a bigger rate cut and it only came out a smaller rate cut. So you'll probably get a buy the rumor, sell the news event. That's my take at the moment anyway. Just because the more chatter I see that people are thinking 0.5 is going to be the first move, makes me concerned that they're pricing in 0.5, and then when it actually comes out 0.25, because Powell's been saying he's only going to do it at a quarter point, it's going to be concerning. Anyway, we've got this is the Fed Watch tool. Oh, there's a market's open, far out. Let's just go back. So Fed watch, just real quickly, Fed watch is priced in 55% a quarter point, 45% a half point. Tomorrow when we get the NFP report, these odds will change. So I'm looking forward to seeing what the NFP results are tomorrow. Anyway, let's focus on price. So price action, I think for liquidity purposes, I think we come down to here today. It's just trying to find a way in, because the market opened at this point and now we're down here. I think this would have been a nice little sell from it, but it's before the market, so a bit risky. Where the day finishes, I wouldn't be surprised if we're bullish today, or we actually break through this level and we break down to this level, and then it sets up potentially Friday buys. But yeah, I'm going to be cautious. But for now, I'm targeting this area. What's your bias, guys? What are you looking for? Yeah, this looks attractive. This where London opened with no bottom wick. Be nice if London can push up and maybe hit this area, take out that Asian high, tap into this liquidity. But let's see. Yeah, I would like to see that actually. I'd like to see price do something like this. But sometimes London hasn't been doing that kind of manipulation. A lot of the time, in the last like week and a bit, it's kind of just made its move. For the open, that is, before the New York gets involved. Like they went straight up. The day before, oh no, that's the day they went up and then down. We caught that. Day before, they just went straight down. Day before, they just went straight up. Day before, they just went straight up. Day before, they just went straight up. Day before, they just went consolidated, then went up. This day, they kind of did nothing. Oh, that's the bank holiday, I think, wasn't it? Yeah, it was a bank holiday. This day, consolidated a little bit, went down and up. Just went straight up. Just went straight up. So, it's been a bit of a shift in what they've been doing lately. Anyone else? What are you preferencing? Buys, sells? We don't have any news, do we, for the open? Yeah, ISM will be pretty volatile. I'll show you the trade quickly just for like an idea. Hey, Ive. On gold yesterday, bit of a scalp, but I got this one. So with that news coming out, this was the Asia high, and we had like some nice little zones like wicks and stuff in the New York session. So when that news came out, this one, I wasn't comfortable taking the buys, but I did have a sell order above here. So hit that one for about 80 pips. When it hit my order was a little bit higher, at 99. Sorry, 99 price shot straight back down, about 120 pip move that it went, but like I was out after like 80 pips. But then I thought gold was actually going to keep on going down. I thought we're going to be US dollar might hold its strength, but then when I saw the jobs report, it came out pretty weak. I was like, oh, put that to bed. It's just, I thought that at least still, even if it was going to be, regardless of the news, it's not such a high impact news that we're just going to get a single candle. It's just going to blast. Once it pushed up above all this area, I was pretty comfortable with that. I'll at least be able to get a reaction out of the trade. And then I can work out when the trade, whether it's going to keep on pushing bullish or not. But you know, that was a nice little move yesterday. Bank of Japan, Takata. This is inflationary. Tightening. They're tight comments. Ooh, be more price hikes in October. Oh wait, that was when yen was weakening. Hey Tom, how are you? Good, thank you. Yeah, interesting. This. All right. Let's see what kind of reaction it has at the fix. And I'm very interested to see what happens if we can push up into this area. Yeah, a bit of momentum here at the moment. Don't want to fight. As is flying as well. Very strong candle. All right, taking the Asian high. Not going to take any impulsive cowboy sells, but if we can at least show some price slowing down, potentially if it starts breaking or get some like liquidity candles here, I could give it a shot. Kind of wish I had those buys now. That's already 100 pips. That's a big move, man. Anyone take buys? Yeah, it's a lot. 11 minutes already, 110 pips. Nah. Now we got to that level though. Yeah. All right, let's see if this is got a nice little reaction at the moment. Little 10 pips at the moment. Let's see if it can bust through it. What we want to see is like a bearish candle, then a bullish candle, and then something close underneath the bearish candle. Something like, ooh. It's the structure in the New York session. So see our price was like wicking, then it pushed up, sat on it, came up, and then dropped. So it's that level. So if this is where New York eventually went up, rated the liquidity above the London high, tapped into the daily level, and then we closed back underneath. So that's this zone. If we're breaking above, I would expect it to, like, there's fairly clean candles above here. So I'm more interested to see what price does, and then if we can start to slow down, then maybe create like some highs, etc. Got clean candles underneath here if it does want to go down. This is definitely a no joke level, this area of demand. Yeah, we're just pushing higher. See how this candle closes. This wick. Yeah. Yeah, it's kind of a 50-50, isn't it? The body. The body pretty much closed. Yeah, right at 50%. So I've already done a partial wick fill now. So that candle doesn't really give me a lot of information. Very bearish candle, but it kind of looks like it rejected this area as well. Yeah, there's also though like this pullback that London just did has actually reconnected these wicks, and this is a good little area as well, like this little consolidation before the push up. Long. Yeah, kind of not really though. Like I just consolidated mostly. All right, we're retesting this top of Asia. Far out. It's tempting to sell that. I don't want to catch the high though, because I don't want to go like learn my lesson. going against this volume. But if we're actually trading back below this pink line, then that could be, I think that would open the door for these lows. So potentially pullback sells. But that's very tempting. The thing that I don't want to fight though is this 15-minute candle as well. This 15-minute candle, or what do you mean? Yeah, the 15-minute candle is closing back here. Then that 30-minute will be looking like a big rejection. So I think it's worth waiting on this one. Yesterday's MMG. Oh yeah. Yeah, if we can be clearing this level. Yeah. Come on. Breakdown. Well, regardless of what this does, this was a good zone that we picked out. This one here. It's definitely giving it pause. Just need a break under this support that's created. We don't want to fake out from underneath here. Yeah. Yeah, hang on. Come on. Oh yeah. Come on. Drop. Don't fake out. Okay, so now it's got this wick under here. So I think if we can get a closure underneath this, then any pullback sells could be very good, because this is the rejection wick now. So price pushed up and it consolidated for a bit off that zone. We've got a clear rejection wick. Now, if we can close below that rejection wick, then it's downtown, I think. Everything all good, Tom? Yeah. What, like a pip or so? Two pips, yeah. Yeah, it's the latency. Yeah, I get that as well. With proper counts, I do. Yeah. Yeah. So I want to trade under this zone. I want to trade underneath this wick. So then I'll be pretty comfortable that the high is in. This up here is aggressive, risky, because we're still very much bullish. But underneath this, once we've rejected that, I think looking for pullback sales could be on. Give me 1 second. Yeah. Are you trading? What program are you using to trade? Okay, can you bring up the journal? No, just tell me what does it say when it said the trade was executed? How many milliseconds? MS. Yeah, okay. So that's not too bad. But so when it price, because we know German can be a bit jumpy, that your price is if you moved exactly to break even. Okay, so let's say that price had moved down and you move your stop loss here now, and then price comes up, and it only when it hits your stop loss does it now send that order to the broker, and it takes like 200 milliseconds to get there, and then the broker will be like, okay, we received your order, and they'll send it back now to your computer to confirm, and then you see it, and the distance that it's done that round trip is the latency. So now what it's done is like when it's triggered, when it's hit your stop loss, by the time it's pushed there and come back, when price is moving back up, it's very likely that price would have just popped up a little bit before going down, and that's why you're getting that little tiny bit of spread. You're getting that tiny bit of slippage, and because when you're getting stopped out, price is coming up to your entry, so it's very unlikely that price comes up and then stops there. It's likely that when price is coming up, it's probably going up just. Oh, I see. Yeah, that's the commission. Yeah. Oh, so it's actually closing you out at break even, but you're just paying for the commission. Yeah, yeah. But because of the latency, it's going to be a combination of both. Probably the commission plus the spread. But if you're only on commission, if you're only on spread only, then as price is coming up, it's not triggering your trade immediately as soon as it hits that line. It's because it's got to send the signal and come back, do that round trip. So likely it's just getting that little bit of slippage, which is absolutely normal. But what Paul said is if you really want to get out at break even, you've got to bring your stop basically like 1 pip into profit, because of the time it moves up, that 1 pip in normal market conditions is going to be like if price is moving tick by tick, unless we get like a news event where price pushes up so quickly and like it just slips you that much, it's likely that by the time it does that round trip and sends the signal to the broker and comes back, it's usually stopping you out just a little bit before, or sometimes you get positive slippage if it just like literally hits it and comes back down, but it's more unlikely for that scenario. So you can front run your stop loss so it's not perfectly at break. Whenever I had because I don't like seeing it either, and when I was using magic keys and I've got that button which is stop loss at break even or stop loss at entry, I would have it stop loss at entry plus 1 pip, so that it gives me that it truly is at break even then most of the time. Yeah. I mean, it's 70 cents in the end. It's just annoying when you look at like your trades and then you see like little green numbers, little red numbers. Which is funny though as well, because like when I was doing that and I looked at my stats, because I was always I would get quite a few break even trades, and so when I took a loss, it was usually like pretty much my full position, because I don't like, as much as I try reduce the loss, I don't normally like, I'll tighten my stop loss, but I don't like close much of my position when I'm in drawdown. So like if it does hit my stop loss, it's either just where I've moved my stop loss to, or it'll hit the stop loss in the full position and just be like a full loss. But then a lot of my wins, when the trade's sort of going all right, when I've closed like a partial or I've moved my stop loss to my entry plus 1 pip, and then it comes back and stops me out, it'll register it as a win, but really that trade was a break even. It's just because I front run the entry a bit. So when I look at like my risk reward, the last account that I was looking at this on, win rate was 73%, but my risk reward was for all the trades combined was like, my profit factor was good. Profit factor was 2, but my risk reward was less. It was like 0.8 or something like that to 1. Is the average of all your... What do you mean? Sorry. No. It's just the way they've calculated it is they've just taken all of your trades and what was of all your trades. So my win rate is 73%, and it was average of all closed positions. What was the average? And then what was the average of all my losing positions? And then they worked it out that way. So if my average loss was $100, and my average win with all the trades, like hundreds of trades you've taken, was $80, then my risk reward was 0.8 to 1. But this is no, you're moving your stop. It's not even factoring in where your stop loss initially was. It's just focusing on what the closed dollar amount was. It doesn't know that you could enter 2 trades. One can look like this, and the other could look like this. And let's say that trade number 1, I risked $100, and then price moved down, say 5 to 1, and I closed it at $500. And then trade 2, let's say I made this worth $500, but I was risking, $5,000. When both of these trades have closed, say I just close this one at this point, and this one I close at this point, the two closed positions were both $500. But if I lost on a trade and I lost $100, it would say that my average, like if I only took 2 trades here, just say I took 3 trades, and yeah, let's say I took 3 trades. One is and then I closed partials on this one, or let's say I closed full at 5 to 1. But the first time I had a go at it, I lost. And then let's say I revenge traded the third trade, and I risked $5,000 to make 500, but I won it. Then I'd have 1 trade that lost $100, 1 trade and 2 trades that won $500. Okay. Now my way that the broker would see it is that my average win was $500 because both those wins were $500, and my loss I had was $100. So my risk reward is 5 to 1 at the moment. It's not factoring in actual risk reward per trade. Far out, man. This is so. I'm only looking for sells under here, under this, but it doesn't look like sells are going to come in at all. So that's a strong open. 140 pips now already. That sucks. I was really hoping that we're going to get buys if we could sweep all of this liquidity. I really didn't want to see London just do what it did yesterday. Basically just went straight up and then went straight up, both from pretty much the same zone. Yeah, so it looks like very much they're going to try go for the liquidity above this area. So there's not much room to play. But I guess don't know where you'd put the stop loss. But if you're looking for a target in mind, you'd have to think that this isn't the high of the session, so that we could target some sort of move up for like, there's only 15 pips left. Risk reward don't make no sense to take it, but you know where the target is at least. So the MMG is above here, 30 pips away. Yeah, I quite like that. Missed too much of the move though to execute on that, but I would say just for practice purposes, is when you're seeing a move, whether you got, like, regardless of whether you're in the trade or not, when the price is moving, what you want to identify is where price is going to. That way at least you can like pick turning points, or at least like areas where you think, well, why would price just stop right here? Does it make sense for price just literally that's it? If we're getting this close to the highs, it's likely we're going to take out the highs. MMG yarn is mid-morning gap. So it's basically when mid-morning gap for like the mid-morning in the London time. So it's between 9:30 a.m. to 10:15 a.m. London time. So the what this correlates with is when the Asia stock markets, like the Shanghai stock market, the Hong Kong stock market, and what's the other one? Another one that's in that zone. Japan stock market closes an hour earlier, but the other three of the other ones, which make up like a pretty sizable market cap when you look at all three of them, they close at 4:30 p.m. their local time. Okay, that's in their local Asian time, and then they open again at 5:15 p.m. for aftermarket trading. So you get a bunch of orders that get executed at market close, and then the market opens again at 5:15 for aftermarket trading, like speculating. But it creates like it's not my thing, but what this indicator was doing was just drawing the gap for when the price closed and when it reopened, and then treated it as like a liquidity pocket. And it does seem to be pretty attractive for price to like head towards these levels, not necessarily the same day, but in future. So that's what the MMG is, mid-morning gap. So the mid-morning gap from, it's usually, I think it's the day before. So that would have been created on the 27th of August. So now this indicator just, the way it's coded is just to date it for the next day. So for theory purposes, I really want to see it hit this black line, and I'd be very interested to see if it can push up and then fill that black line. So whenever you see Bruce in the Discord, he's marking these levels. He's putting like a little poo on it. Not sure how he puts the poo on this. So we'll see if price can make its way, creating bullish structure. That was the rejection. So that was the double bottom, and then it took the low. Power pushed up nicely, came up, came down. Let's see if it can hold the bullish structure. Now at least take out the highs over here. Where's New York high? So New York high is getting close as well. So it should at least, you'd think at least it'll make its way that little bit higher. It won't be something I take because I had obviously the incorrect bias to go with, and this volume, I wanted to see this as the high, and I wanted to wait for price action to play out and then start seeing it break down potentially to get liquidity from lower, but looks like they had no need for that. But I can't take a buy here to go up there. That's just, you can't do that. I can't do that. Yeah, I know. That's what's disappointing is that the way that this moved, like this is the first candle, this is the second candle. It's disappointing to not be with it. Come on. I'd even attempt a quick cowboy counter trend trade from above here. just to get something for the session. It's missed the bullish move. But you look at the size of the previous day, how it moved up like 165 pips from the low to the high. If it did something similar, then I would imagine there could be some sort of profit taking. So it's quite possible to get a move, even if it's just a 1-to-1. I think that would be well worth the risk. Seen as you obviously missed the buy move. Got clean candles above this, so I don't want to have my stop loss too much above here because it wouldn't make sense. Now this area, this screams of liquidity as well. So I'm expecting that if we are getting above this high, I think we can have a reaction, but we might even continue higher. But if I'm taking a counter trend trade, I'm trying to get my risk out as quick as I can because it's kind of scary going against this kind of volume, but I think it's worth that counter. So I'll just move it over here just for now. Forming some rejection wicks here at least. And this was yesterday's London high. Again, mixed sell signals. Ooh. Does anyone trust the mixed sell from this level? Yeah, I do prefer the mixed sells from like 3, 4, 5 minute. Not so much the 1s and the 2s. And I think this was a bit impulsive. The level was alright, but we wanted to see price break down more. Because above here, whilst I didn't mind the area in terms of like potentially a place for liquidity to turn around, it wasn't like a higher time frame zone. So I think that was a little bit impulsive. But if we got like bearish price action, and we got structure forming, and we got price breaking down from structure, then I think it's good to target the sells. But we needed to see price action develop from here. To take a McSell when price is going really against the trend, because it's very bullish at that stage, to take the McSell, you really want to have the one that's at a higher time frame zone. So even this one, it's not quite at my higher time frame zone, even though it's close. So you'd have to just, I guess, adjust the stop loss a bit. Oh, I see. Had an hourly zone. Where was your hourly zone? Was it here? Because that's roughly where the sell was. Cause see how it's sort of chopped all through here. So from the hourly, it's like a real soft level. All right. Could we be pushing up to the poo level now? Come on, push. So new hour's about to close now. So 10 seconds and the new hour candle comes. Let's see if it does. It would be a little bit jumpy when it closes. All right. Come on, keep pushing. Yeah, I really wanted to get above here. This looks very nice for liquidity above here. especially this zone, especially that one. Yeah. The first hour closed super strong. Not too sure. Eventually they get, I think I remember him saying that eventually they get, yeah, I think that 2 weeks rings a bell. Yeah. Oh yeah, because it's, sorry, yeah, because it's, yeah, I think he said it needs to be touched from both directions. So if it's come down and grabbed it, it should come up and grab it as well, like scrub from coming from above and coming from below. Either way, it's amazing how a lot of the times they line up with some sort of price action. Like as price was falling, we've got a big area of liquidity, and then a little area, and then this one's reacted from that. So, and we've consolidated again before having a drop that breaks down. So, to me, this is where price would get, like from the study session on the weekend. Every time we've got like this is an area, this is the main area where they consolidated, and then price ripped down from here and made a new lower low, lower close, and then we've gone consolidated here. So they've got multiple entries. They've got like a big position that's sitting here, and now they've got another area here where they've likely added to those cells, where price is now gone and pushed down and then come back up. So this is an area to be defended. So their price is not, because they don't want price to Well, I wouldn't want, if I was trading, I wouldn't want to build my position, say down here, and then have price push up and then come back down here and then start adding to my position. You know what I mean? Because that's really dangerous if I'm adding to my position near my entry. Because what happens now if I'm building the position, which is decent, price moves up and then it comes down, and now I keep on adding to my position, what I start getting is a bit more overweight at a particular price. And what happens if then price drops? You know, some other, say I'm a shark, but there's a bigger shark that I didn't realize, and that shark senses that I'm in a buy position and that I've got liquidity. That there's a cutout point for me, and if this other bigger shark senses that I'm in a big good position here, then what they'll do is they can run it. You know, if they can run it down, and if I'm holding this position, all of a sudden, and I'm in drawdown that I can't hold, I'll be forced to cover my position. So what I'll have to do is I'll have to dump it, but you usually can't. These guys, because they can't trade like us, what I can't do is just unload my position to the market, because I'll get slipped a lot. So at the same time I'm trying to like cover my position, what I'll be doing is if I was buying here, I'd be forced to sell or buy something that's going to protect it, like hedge myself a lot. And what that would do is just lead to a lot more selling. So even though I was buying here and then I'm forced to start selling, price is unlikely just to, like, price can really start to drop then if you're forced to cover your position. So does that make sense when I say that? Is anyone confused when I say that? Yeah, it's can be mind-boggling. Yeah, mind-boggling. Yeah, they would have other ways. So this would just be like contracts, but they might hedge by buying the same asset or buying something that's very, very correlated in the opposite direction, or buying like a lot of it comes from like options trading. So if a lot of these big boys have got a big buy position where they buy the underlying asset, they'll buy options like puts or calls, and then they're much cheaper, but they might cost like 1% or 2%. And think of it like when you buy a car, you buy an insurance policy at the same time, and you hope you never have to use that insurance policy, but it's just there in case something really goes against you. But that insurance policy means you have the right to execute on it if you need to, and that gives you a guaranteed rate that you can buy something at as for a certain amount. So if a lot of these guys will have that, they'd be silly to have that much capital invested in the market without an insurance policy that can get them, so when they do need to cover their position, that they can cover at a set rate. Either way, beside the point. Like that's in case. That's why you can see like when a strong, what you think is a strong resistance level, when you see those flash crashes and price really just rallies from that level, or drops like in a huge wick, that's often a short covering position. Now, the way that these guys would be safer for them to set up price is to, when they build a position, let's say for example here, is that when prices come down, they've scaled into that position at another price, right? And that if they'll likely defend this level, so they've got a good amount here, and they've got a good amount here as well. And if they're unable to defend this side, if the volume's just simply too great, then they have got an option where they can just get out from the higher level. Oh, thanks, Adam. So remember what I was saying, like if you have seen the study session, it's like when you've got a low, what we're trying to like identify is like when you've got a low and price is moving up, there will often be a level where they'll try to defend their original position and then push up. But and then at some stage later on, if this area is not being held, thank you. If this area is not being held and then price is breaking underneath it, then usually it's going to go to this position. And that could be like, you can see all this move go. Well, then once it's under here, sometimes this can be that real beautiful A+ setup, which is not much of a move in the whole sense of things, but it's often a very high quality, easy targeting 20-30 pips. I'll try to point out more of them as we go, but there's like some really, really nice levels. Like, see this level? It's like you can see them all over the place, and the market's fractal, so you'll see this on the lower time frames, the higher time frames. This is a little consolidation where price sort of consolidated, built an order, came down, made a low, made a high, and then we broke out of that level. So we had that's that level. Then price came down again, and then we had another little form where it consolidated, and then it went down and made a new low. So these are your structures as price was moving down. Now, if price is not respecting the lower structure, like this one, price comes down, grabs some sort of liquidity, making lower highs, eventually those lower lows starts making a higher high. And if we're not going to respect this level, how we have a little rejection, and then price closes above it, it's likely now we're going to go to the next level of structure. Now, whether we go to the top of that structure or we get to the bottom of that structure, this most likely that once we're here, it's easy to go up to this level. If we close inside this level, then we go to the top of that structure. In this case, price got turned away from it and then moved down, but then the second time it's coming up to it, it's usually a fairly clean move, and you can see like I had no problem cutting through this, is because whatever they were doing here and here, at some stage they've got to just abandon it, and then that's when we got that turn. But it was hard to predict that when price is down here. At the time price got up to this level, it just happened too fast, especially on this 1 minute time frame. So the same thing here is that we know that London took buys for sure, because look at the size of that move. Now they've consolidated. They've got a little consolidation that's here, where price moved down, moved up, went down, moved up, consolidated, and then we just burst out. Now what we've got is a level where they consolidated and added to those positions. So the same deal here. Let's see if we can get a reaction from this level. So maybe could be a good idea to try buy it from here to see if we can get that reaction. If price closes inside of it, I would expect it to go down to the bottom at least. If we can break under this level here, we might have a little reaction, but if we're actually clearing this level, then with these clean candles, I think there's nothing stopping it from revisiting down here. It could probably bounce, and if we close inside of this, we go straight to the bottom. So for now, whilst we've got bullish structure, I think it would be a fairly we can get like a bit of a reaction from this level. when you stop looking for buys and look for sells is really dependent whether you think that the buys that they took down here, where was their target? Was their target yesterday's London high? Potentially. So maybe they have achieved their goal and now they're actually building the new position to fade the initial position and go down. So this is where the turning point can be. But if I don't, probably the way that the hour candle closed, I don't think that was the high. I'd expect it to at least take this daily level, or at least take New York. Oh, it did take New York high, didn't it? Actually. So maybe they were looking. There's probably a good amount of sell positions from the New York session. That was liquidity for them. But I would like to see it take a bit of a consolidation, not just a V-shape high. So I'm a little conflicted whether I want to take whether that was the target. So now, can we take a buy from this level? Let's just make sure they don't close inside the structure. At the moment, while price is coming down, maybe you want to wait and not try pick a low, but see if they can reject and see if they can actually start closing back above here again. If that's the case, then I think we can target to retest the high. A 15-minute is a bit scary though. Because we've got a 15-minute HCS forming. This one. And this one. Imbalance. Which one? This one. This one. Oh, okay. It's got a little bottom wick on it, but yeah. Yeah. Right on the daily level as well. Oh man. Yeah. Yeah. Like the clear idea for me is if we can actually start getting back below here again, and then I'd be thinking that this was a liquidity grab from around like the London high, New York high, daily level as well. But right now we're sort of like we're starting to we're getting a couple of rejection wicks here, and we're at this support zone now. Imagine if it just fades this entire hour candle. For shorts, I wouldn't want it closing inside of this. So I think you could probably place it above this candle here. I don't think you need to go above the highs. I think if it's breaking above this bit, then it's definitely going to hit up there. So for risk reward purposes, I think you can have it lower than that high. Alright, this is the make or break zone now. Yeah. Was all this just manipulation to grab a great entry? Because if they wanted to take it down, why would they want to sell the low of the day? And they took it all the way up in a clean move, basically all the way back up to where grab New York liquidity. We need to see whether they're going to defend this position, or was this simply a fake out? Deter what? Nah, not really. Not necessarily, I don't think. Price might not move much more out of this range until New York volume comes in. But let's say that price is now pushing down here and then New York opens. New York could pull back and then just drop. So the London range stays around that size. It's just the bulk of their trades. We need were they looking to buy or were they looking to sell? At the moment, there's way more price action up in here. So if they're building a sell position, this kind of makes sense that it takes time for them to build it. If we're breaking down, I would be targeting here. Just need to see whether the support's going to hold or not. Are you holding that, Tom, or did you close out? Yeah, okay. Yeah, one scalp. It's looking pretty ominous, isn't it? The 30 minutes about to come to a close. do we? Oh yeah, that shouldn't affect it. Looks like Aussie had a reversal. What's gold? Oh, gold 25.13. Yeah, gold's been flying. There's a lot of volatility today. Yeah. Yeah, that's right. Is it the people or the bank? Oh, the Shanghai Exchange, yeah. What do you mean? Mm-hmm. Mm-hmm. Oh, okay. Because they pay a better rate, that's why. So so that's why the Asian session has been pretty good a lot lately. Is all the Asia buying of gold. Now the Shanghai Stock Exchange, sorry, the Shanghai Gold Exchange, China have been building clearing houses outside. Like they've got to build clearing houses so that they can make the yuan more tradable, whether it's going to be the onshore renminbi or the offshore yuan. But they need to have clearance houses so that they can be like other countries can do trade. But the reason why they use the Shanghai Stock Exchange more for selling gold is because they pay more than the London Gold Exchange. So a lot of people buy gold from the London Exchange and they sell it in the Shanghai Exchange, and they can buy it for cheaper and then sell it for more expensive because there's much more demand from the Shanghai side. So actual physical gold is moving from west to east because they're buying cheap and they're selling it for more expensive, but the actual gold now is actually traveling that way. When you still look at all the reserves on the world, the US by far dwarfs everyone. They've got the most gold, but the other countries are now starting to really catch up, trying to, I guess, like you're saying, is trying to get away from the US dollar as the business reserve currency. I don't know though. Would you trust? I wouldn't trust doing business with these countries. Yeah, that's what we want, volatility, huh? All right, so I still haven't executed on anything, but I'm getting more. I'm liking this level more and more now. That the more that this gold, sorry, now we're stuck in gold. The more that we've got this support level here, if we're failing to make highs, I think if we're breaking through here, we break down. So I might actually give that a sell now as anticipation. I'll keep my entry a bit smaller because we're still trading above support. I'm going to put a little trade on. I'm going to target these lows. It's going to be a pretty tight stop loss though as well. I think I'm going to have it above here. I'd like to see this support broken. I'm just keeping it above here because if this is that zone where they got in, the bulk of that, I don't really want to see, I don't want to hold it much above this level. Otherwise, I think we're retesting the high. So for risk reward purposes, it actually makes decent sense. 30 minutes closed though, so let's just hope we're going to get that straight wick fill and then break underneath and then keep on traveling south. So safer trade is waiting for the support to break. Anticipation trade is a bit dangerous because I'm above the support, but the payoff is that it'll be better risk reward if it works out. So hopefully this 3 minute candle can close quite nice, like a train track. Alright, now we just don't want this candle to fade the bearish candle. This 5 minute candle could be pivotal. I'm going to have to run soon as well, so hopefully it just moves for us. Come on, break that rejection wick. Close underneath it, opens the doors for more downside. All right, I'm going to take a little bit off the table. I know it's very soon, but I'm not going to be able to watch this. I'm going to tighten my stop loss. So I've just removed the risk out of this trade now. And I'm going to have to get going. So hopefully it pays off. If it comes up, stops me out, it's break even. Because where I've closed, I've just made the stop loss equal to it, roughly. Now I really want to see the support break. I don't want to see any more rejections from this level. I think the parting words I'm gonna say is that it can be, we had an idea at the start. I had an idea at the start based on the price action I was looking at, and then price did something unexpected. Like the size of this move was a bit unexpected. So then what is important is to just take your time to formulate your next idea. And if the idea might not pop out straight away, and you can see like now I actually quite like to see the support broken, because now I can see two supports. It pushed up from here. The next time I pushed up was lower, and that if this indeed does break, then I'm pretty comfortable holding some sells, and I've got my original target in mind. It took time. It took all this watching for this potential idea to formulate. I had to wait for the patterns to play out, because like at the time I couldn't visualize this pattern when I was seeing this. and I was wondering if it was going to go higher or lower. So it took literally time, and then eventually the idea popped out, and I'm like, you know what, it's actually worth a risk to try retest that support. It was high enough. I knew where my stop loss would have gone. Price came down, risky area, so I was able to remove some of the risk. If price comes up now, I don't want to see it break this high. Otherwise, that idea is now invalidated, and that's why my stop loss is there. It's not that I don't think it could keep on going down. It just invalidates the setup that I want to see. And if we can break, what I'd prefer is to actually be trading underneath this green area. Then I think we can really start to fill this candle. But I probably won't be able to see that happen because I'll be with Maddie. But let's just see if this works out. Hopefully it works out. We've got the mid-morning gap starting now, so hopefully we get a bit of volume to the downside. I don't want to see volume to the upside. If it does push up to the upside, what I would be looking for is that rejection area, which was above the New York high, above this zone, and I want to see how price reacts to this level, and especially this level. I think we can get a really nice reaction from this one because they consolidate a lot longer, and it was during like the London close period where this consolidation is a little bit late in the day, so likely to be a little bit less volume, but could still be a reaction nonetheless. But I really like this one if price is pushing up to that zone. It would be very much counter though because the momentum's to the upside. Hopefully this plays out and don't have to worry about up here, but we'll see. Anyway, guys, I'm gonna have to scoot, so bit of a non-event for the actual trades taken, but let's see if this one works out. Maybe some scale and opportunities if we do reject from here and we're trading back underneath the green line. That's always a possibility. But yeah. Alrighty, so good luck today. Trade safe, keep your risk low. It's Thursday. Try make sure you consolidate your week and finish the week on a good note. Alright. I'll upload this so you can watch the recording if you want. I'll figure out where I'm going to put it on YouTube somewhere. But it was recorded, so cool. Alright. If you need anything, hit me up on the Discord. Okay. I'll see you guys later on. Okay. Bye-bye.